Hello, this is George McAllister with Intsville, and I'd like to welcome our listeners to today's podcast session. We're pleased to have Doug Sherlock, Senior Healthcare Analyst for Sherlock Company, joining us today. Doug is here to give us his quarterly insights into financial markets of health plans.
Thanks, George. In this podcast, we'll review the performance of the managed care industry for the fourth quarter of 2020 and year-to-date 2021. We'll also discuss sector valuation indicators and operating trends. First, I want to speak to stock prices and valuation. As of March 3, stock prices for the publicly traded health plans are up by an average of 1.2% since the beginning of the year. This compares to the 1.7% increase in the broader market measured by the S&P 500. But health plan sector market capitalization decreased by 3.7% year-to-date. The overall increase stemmed from a sharp increase in SSS and a smaller increase in Cigna. Stock prices for 5 of the 7 plans lost ground so far this year, led by Humana at 6.7%, followed by United Health at 5.1%, and Centene at 2.0%. Anthem was also lower by 2%. Molina decreased by 0.3%, and Cigna, SSS and Cigna gained by 18.4% and 6% respectively. The valuation metrics were mostly lower since the beginning of the year, with the exception of the price to trailing 12 months earnings increasing by 8.9% to 16.9 times, and price to operating earnings increasing by 9.5% to 15.4 times. The price to estimated 2021 earnings was lower by 1% to 13.3 times. Price to sales fell by 6.8% to 0.65 times. Price to total member decreased by 3.7% to 3,200, and price per risk member fell by 1.8% to $5,100. All rates of change are calculated holding the universe of health plans constant in both periods. Since our last podcast in November, the average health plan stock prices are lower by 4.4%, with health plan market capitalization decreasing by 6.9%. The S&P 500 gained 6.5% since November. Health plan valuation metrics trended lower with the exception of the price earnings and price to operating earnings ratios. There have been 2 new health insurers that have recently gone public. Oscar Health went public on Wednesday, March 3, representing a total membership of 529,000 members. This company focuses on the exchange business. Clover Health went public on Friday, January 8th, and has membership of 66,000 Medicare Advantage members. Clover Health believes that its offering is the first time that a health plan has gone public in 15 years. On to our review of operating trends. For the fourth quarter of 2020, combined ASO and risk membership increased by an average of 10%, while increasing by 6% in total to 139 million members. By average growth, I mean the average of each health plan's growth rate. Total reflects the change in combined membership of the plans as a whole. Fully insured risk membership increased by an average of 15% and in total by 13% to 80 million. Medicaid plans experienced an average increase of 36% and a total growth of 44% to 21 million members. Centene had the largest growth rate of 50% due to its acquisition of WellCare. Without this acquisition, Centene's Medicaid membership would have increased by 17%. Commercial plans reported an average gain of 6%, increasing to a total of 58 million risk members. Anthem had the largest increase in risk members of 11% and to a total of 17 million members. The proportion of total members served under self-funded ASO arrangements fell by 3.4 percentage points to 42.5%. On average, the plans posted a 3.9% decrease for this product, and ASO membership was down in total by 2.1% to 59 million. Revenues for all plans increased by an average of 20% and in total to $159 billion. Medicaid plans reported $34 billion in revenues and an average increase of 37% and a total increase of 45%. Centene posted the largest gains in revenue for Medicaid plans, up by 50%. Commercial plans increased by an average of 13% and in total by 11% to $126 billion. Anthem posted the largest increase in revenues, up 16% to $32 billion. Premium rates for all plans grew by an average of 5%. Medicaid plans and commercial plans experienced an average premium growth of 1% and 6% respectively. Do recall that these premium rate calculations don't adjust for changes in mix or geographic factors or benefit design changes within the products. Operating earnings for the plans in the fourth quarter totaled $3.3 billion, a decrease of 54%. Medicaid plans in total reported operating earnings of $113 million, a decrease of 77%. Commercial plans lost ground, totaling $3.2 billion in operating earnings, a decrease of 52%. Humana was the largest factor in this, and it had a loss of $560 million compared to a gain of $296 million in the fourth quarter of 2019, making up a quarter of this sector's decline. Average operating margins for all plans decreased by 3.2 percentage points to 0.6%. Medicaid plans posted a 2.3 percentage point decline to 1%. Commercial plans' margin was lower at 0.5%, a reduction by 3.5 percentage points. The health benefit ratio for all plans increased by 1.6 percentage points to 86.1%. Note that Sherlock Company's calculation of health benefit ratios excludes the impact of favorable and unfavorable prior period reserve development. When they are announced, we remove them from the expenses and recognized in the reporting period and then allocate them to the quarters in which the underestimated expenses actually took place. The average health benefit ratios for Medicaid plans decreased by 0.4 percentage points to 83.5%. Commercial plans posted a 2.4 percentage point increase in their health benefit ratio to 87.1%. The administrative expense ratio increased by 1.3 percentage points to 15.9%. Medicaid plans reported an average increase of 2.6 percentage points to 15.8%, while commercial plans experienced a 1.3 percentage point increase to 12.9%. The health insurance provider fee has resumed and has increased to $15.5 billion for 2024 all plans nationwide, and presumably it has a commensurate effect on these plans. Depending on the plan, this may or may not be included in administrative costs, and this depends on whether they disclose it or not. The non-operating earnings fell by $138 million. Our calculation of non-operating income is the sum of investment earnings, income earned in non-health lines of business, less interest expenses. Medicaid plans reported a loss of $114 million for non-operating earnings compared to a gain in the prior quarter prior year's quarter of $22 million. Commercial plan trends were flat compared to the prior year quarter. They had non-operating earnings of $1.5 billion in both periods. Net earnings for the fourth quarter were lower for the plans, decreasing by an average of 57% and in total by 61% to $2.7 billion. All plans posted a decline with the exception of S. Medicaid plans had net earnings of $30 million, a total decrease of 93%, and an average decrease of 90%. Commercial plans generated $2.6 billion in net earnings, a total decrease of 59%, and an average decrease of 44%. Humana swung to a loss of $280 million in net earnings, a decrease of $878 million, and was, like with operating earnings, responsible for 25% of the decline. For the year, revenues for all plans increased by an average of 18%, and in total by 17% to over $500 billion, $570 billion. Medicaid plans reported $131 billion in revenues, an average increase of 32%, and a total increase of 43%. Centene posted the largest gains in revenues for Medicaid plans by 49%, in part due to the WellCare acquisition. Commercial plans increased by an average of 12% and in total by 11% to $440 billion. Net income for 2020 improved by 3% to for the industry to total $31 billion. Commercial plans increased in total by 2.3% to $28 billion. Medicaid plans increased by $2.5 billion, or rather to $2.5 billion, a total gain of 21%. Humana, a commercial plan, had net income for 2020 of $3.3 billion compared to $2.7 billion in 2019. Operating income increased by a total of 18% to $38 billion. Commercial plans improved their operating income in total by $4.4 billion to $34 billion. Medicaid plans had operating income of $4.1 billion in 2020, an increase in total by $53 billion from $2.7 billion last year. Now, I want to close by touching on a key operating factor. 2020 was a difficult year for the management of health plans because of government actions to mitigate the effect of COVID-19. As a result of mandated shutdowns or capacity limits, the unemployment rate peaked at 14.4% in April of 2020 from a low of 3.8% in February. While the unemployment rate has since declined, it still remains elevated compared to recent years. An article recently published in Health Affairs compares this adaptation to the 2008-2009 Great Recession, noting that the earlier one led to a much smaller job loss. Job loss is, of course, associated with declines in commercial membership. On the other hand, the article's authors observe that, quote, among the 25 states with June 1, 2020 total enrollment data, total Medicaid enrollment rose by 1.7 million people. This figure rose to 2.3 million people when they are included in the March 1 to May 1 changes for the 7 additional states that were surveyed by these authors. For those of you who have an interest in the effect of these membership changes on your costs, I encourage you to look at the models on our website. There's absolutely no charge to you, and it reflects analyses of our benchmark values. For the effect of product mix changes from commercial to Medicare Advantage or to Medicaid, please look at the application called Test Drive. and apply the different mix scenarios for your product mix. Then, to estimate the effect of changes in scale on your costs, we invite you to look at the application called Scale Cost. This will enable you to calculate the effect of a decline or an increase in membership on each of the expense clusters, such as sales and marketing, or medical and provider, or account membership administration, that are found in the Sherlock Benchmarks. Speaking of which, we are now launching our 2021 Sherlock Benchmarks. We circulated the survey forms for the Blue plans yesterday. They collectively serve most of the members that aren't served by the publicly traded Blue Cross Blue Shield plans. The independent provider-sponsored universe with 19 plans meets next week, virtually to my regret. Medicare and Medicaid universes will launch this spring. If you are interested in participating in any of these universes, we think that participation in any of them remains feasible to you. Please reach out to us if you are interested. You will be among good company. As always, you can get a transcript of these remarks through MCOL or through Sherlock Company. Again, they or we can point you in the direction of the two free website applications noted previously. We look forward to hearing from you. This is Doug Sherlock of Sherlock Company.
You've been listening to Doug Sherlock share his quarterly insights into the financial markets of health plans.